Hello, this is our new video for August 6, 2019 in preparation for the next trading day on Wednesday. My name is JC De Guzman. I'm going to send you my technical analysis for 10 stocks. I will give you my overall sentiment and recommendations too. I'd like to remind you two things. First, everything that you're going to hear in this video is geared for short-term trading purposes. Number two, if you will see any of these 10 stocks starting at a price lower or higher than the dominant range that you're about to hear or see, make sure that you post a request for that stock's latest trade and volume distribution and true market sentiment charts in our private clients forum. But do that, of course, only if you are interested in trading that issue or that stock. Let's begin with PHEN. PHEN closed on Tuesday at 2.65. Its support maintains its position at 2.2. Same thing with the resistance, it's still at 2.8. Our 10 MACD combo is not yet valid because MACD is still trading below the signal line. Nonetheless, I am seeing a formation of a bullish convergence between the MACD and the signal line. Based on my observation, we will only see the MACD crossing above the signal line once the price breaks above 2.8, probably between 2.8 to 2.9, but it's getting there. RSI is still in the neutral level. It's also upward sloping. The risk level of PHEN is still high. The positive DMI is still hovering the negative DMI, but the upward momentum is not yet confirmed very strong. Based on my observation again, we will only get there once the price breaks above 2.8 or maybe up until 2.9. The trade and volume distribution chart of PHEN shows that the dominant range is between 2.6 to 2.65. That makes the momentum power indicator bullish. Now, if PHEN starts at a price lower than 2.6, I suggest that you should start monitoring it between 2.48 up to 2.51. The true market sentiment, let's see, the true market sentiment of PHEN is, based on this true market sentiment chart, is bearish. On the other hand, it's still bearish. What does that mean? There's some sort of hesitation among the majority of the top 10 players or top 10 brokers in buying the price or in buying the stock at a price closer to the resistance at 2.80, 2.8. That's quite understandable because it's now slowly inching up closer to the resistance, but that's just the true market sentiment. But my overall sentiment for PHEN is still bullish. So if you have had PHEN and it's still trading above your trailing stop loss, you can either hold your position or add more shares. You have a data-driven reason to add more shares because our momentum power indicator is bullish despite the invalidation of our 10 MACD combo. But like what you've learned during the evergreen strategy in trading the Philippine stock market, I have clarified, and emphasized that you should only preempt or skip the validation of the 10 MACD combo if and when you consider yourself as an experienced and disciplined trader, provided the momentum power indicator is bullish. And that's exactly the case. The only missing variable here is your answer on whether you consider yourself as an experienced and a disciplined trader. Okay? Now, if you're planning to enter a new position on PHEN, do not forget that extra process that you must always have to go through, and that is the calculation of your reward to risk ratio, which involves the position of the stock's last candlestick and its immediate resistance and support levels. By the looks of this, on this chart of PHEN, you will get a thicker potential loss, potential risk than your potential reward. Are you satisfied with that kind of a setup? If you are, Just be honest with yourself, then you can do a test buy as well within the dominant range. I just want to let you know that the PHEN has been trading sideways between 2.2 to 2.8 since June 2019. You've heard me say in my previous video that I am not interested in trading stocks that are just trading the range. I prefer stocks that are either already in a trend or are poised to register a trend. So that's my personal take when it comes to cherry picking trade setups. Okay, but we all have our own risk tolerance and preferred trade setups anyway. So you've heard my overall sentiment and recommendations for PHEN. Next we got PXP. PXP closed on Tuesday at 11.48. The immediate support is at 10.05. Resistance is at 13.6. The 10 MACD combo is still valid. RSI is inching closer to the classical overbought territory. The risk level of PXP is still moderate, but it's just a few less than 1 point away from getting that high risk level. The upward momentum is very strong. Foreign investors registered a net foreign buying worth 1.2 million. Now, the dominant range of PXP is between 11.48 to 11.6. That makes the momentum power indicator bullish. Should PXP begin at a price lower than 11.48, I suggest that you watch out for the range between 10.6 to 10.78. The true market sentiment of PXP is bearish. Probably, again, because it could be because the fear of other traders in seeing that the RSI is already inching closer to the classical overbought level. But as far as our strategy is concerned, we are protected because we are using a trailing stop loss. And I want to believe that you are indeed following our methods in here by protecting your capital, preserving your gains, and preventing unbearable losses by using your trailing stop loss. Okay? It doesn't make sense paying for your subscription if you will just skip those important processes when it comes to trading. Okay? So my overall sentiment for PXP is bullish. If you have had a position in this stock, you can either hold your position or add more shares. If you are planning to enter a new position, you know the drill. The extra process, calculate your reward to risk ratio first. If you are satisfied with your triple R, you can do a test buy within the dominant range. Make sure that you are on top of your trailing stop loss and that you are doing an upward adjustment every time that you see a price inching higher than the previous basis in calculating your trailing stop loss. Okay? Next, we got PHA. PHA closed on Tuesday at 0.69. Support is at 0.53. Resistance is still at 0.78. Our 10 MACD combo remains invalid. That green candlestick on Tuesday wasn't enough to make the candlestick cross above the 10 SMA and for the MACD to cross above the signal line. Unfortunately, I am not yet seeing a formation of a bullish convergence between MACD and the signal line. The RSI of PHA is still near the classical oversold level, but it's not yet inside that territory. The risk level of PHA is already high. The downward momentum is about to get high as well. So it's about to get that very strong category, since the ADX is already about 3 to 4 points away from touching the 25-point level. The negative DMI is already hovering above or hovering the positive DMI. The dominant range of PHA is between 0.63 to 0.69. So let's see if the momentum power indicator is bullish in this case. Let's see if PHA will register another bullish momentum power indicator above 0.69. We have to observe if a PHA already wants to treat the 0.69 level as a rebound zone. We are yet to confirm that. We must see another bullish momentum power indicator as trading happens on a Wednesday. The true market sentiment for a PHA is bearish. My overall sentiment for PHA is also bearish, but again, the momentum power indicator is already bullish. So if you are an experienced and a disciplined trader and you would want to enter a new position and you are satisfied with your reward to risk ratio, you can do that. You can do a test buy within the dominant range. But if you are a relatively new trader, I suggest that you wait for the 10 SMACD combo to be revalidated. And based on my observation, that will only happen again once the price of PHA is already moving above the resistance at 0.78. Okay, my overall sentiment is still bearish on PHA, but you got the momentum power indicator bullish in this case. Okay, if you have PHA and it's still trading above your trailing stop loss, I suggest that you hold your position, don't top up yet. Next, we got FB. FB closed on Tuesday at 104. It's now at the brink of crossing above its immediate resistance at 104. Support is still at 100. If it breaks above 104, the next resistance will be at 109. The 10 SMACD combo is already valid. The MACD crossed above the signal line on Tuesday. RSI is neutral, but it's upwards sloping. The risk level of FB is still low. The downward momentum is, well, the negative DMI is hovering the positive DMI, but the ADX is still below 25 points. But it's not yet out of the woods. Why? I am not yet seeing a formation of a bullish convergence between the positive DMI and the negative DMI. But again, that's just a momentum barometer. Our 10 SMACD combo is already valid. So the dominant range of FB is between 100 to 104. It was actually forced close at 104. If we are to really pick a range per se, I would say that's between 99.75 to 100. It was forced close at 104. But anyhow, whichever we pick, the dominant range is still closer to the intraday high than the intraday low, and that makes the momentum power indicator bullish. The true market sentiment of FB is bearish. However, it's still bearish. So, if you have had, I don't think some of you have had FB because it was in a downtrend. It was in a downtrend for a while already. So let me just give some pieces of advice for those who are planning to enter a new position. You can either enter a new position now because the 10 SMACD combo is valid and the momentum power indicator is bullish, or you wait for a breakout above 104. Those are your two choices. When you do that, make sure that you will only do a test buy if you are satisfied with your reward to risk ratio and be on top of your trailing stop loss as well. That's very important. In this case, I'm already bullish on FB in the short term since our confirmed buy signals have led us to giving us a data-driven go signal to do a test buy on FB. It's not a guarantee that FB will move higher than 104 up until 109 or beyond, but we should be fine for as long as we know where our trailing stop loss is. So that's it for FB. Next we got PPG. PPG closed on Tuesday at 6.26. Support is at 5.96. Resistance is at 7.2 right here. The 10 MACD combo is not yet valid, even though the last candlestick is still trading above the 10 SMA. Let's not forget that the MACD is still trading below the signal line. RSI is still the neutral level. The risk level of PPG, on the other hand, is extremely high. The upward momentum remains very strong, however. The dominant range of PPG is between 6.07. It's between 6.07 up until, it's actually between 6 all the way to 6.26. That makes the momentum power indicator bullish. The true market sentiment of PPG is bearish, however. So, if you are a relatively new trader, I suggest that you wait for the 10 MACD combo to be revalidated. Only those who consider themselves as experienced traders should skip the 10 MACD combo, the 10 MACD combo's revalidation, since the momentum power indicator is bullish. But even I'm half-hearted to enter a new position on PPG. Number one, the 10 MACD combo is not yet valid. Number two, the true market sentiment is bearish. So I did not see a huge interest to buy PPG as far as the sentiment of the top 10 brokers is concerned. Okay, I think I would be interested to trade PPG once it revalidates the 10 MACD combo. Another reason is the volume-related concerns in the past. It's only this July that PPG started to kick in a relatively huge daily volume. So in my case, I'd like to see some consistency first in terms of the daily pattern on daily volumes. I'd like to see some consistency. Anyway, PPG is not the only fish. It's not the only fish in the PSE's ocean, so to say. So I don't want to stress out myself on whether I should trade PPG or not. There are some stocks right there, which I already talked about, which won't give me a more stressful situation trying to think on whether I should go or not go in trading this stock, PPG. Okay? That's my personal sentiment, however. So that's it for PPG. Next, we got JFC, an index company. It closed on Tuesday at 235 pesos per share. Support is at 222. Resistance is at 242. Foreign investors registered a net foreign selling worth 228 million pesos. The 10 MACD combo is invalid already. Of course, these are already the top 5 losers, so our momentum power indicator is automatically bearish. I don't see any formation of a bullish convergence between MACD and the signal line. All lines here are downward sloping except for the risk level, historical volatility. RSI is 7.7 to 8 points away from entering the classical oversold level. Let's wait if JFC will support the resistance near 220. Risk level is already high for JFC. The downward momentum is still very strong. The dominant range of JFC on Tuesday was between 235 up until 240. 235 to 240. The downtrend is still more likely to continue. The true market sentiment of JFC is neutral. So the interest to buy the dips started to dissipate somehow because it's a neutral true market sentiment. So It's all the more that I should advise you not to enter a new position in JFC yet for short-term trading purposes. If you have JFC for long-term investing purposes, you have to close your ears. Again, I mentioned in the introduction that everything that you're going to hear here is for short-term trading purposes. So for short-term trading purposes, don't enter a new position on JFC yet. It's still more likely to continue going all the way to 200, 220, and then 200, and then 180. Okay, so I am still bearish on JFC. Web is the next stock that we're going to discuss. It closed on Tuesday at 3.78. It broke below the previous support at 3.84, which is now acting as its immediate resistance. The immediate support is now at 3.23. The 10 MACD combo is already invalid. It's still invalid. It continues to be invalid. And RSI is in the neutral level, but it's downward sloping, of course. The risk level is moderate. The downward momentum is not yet very strong, but ADX is already 8 points away from getting that very strong downward momentum level. The dominant range of Web on Tuesday was between 3.7 to 3.8. The true market sentiment of Web on Tuesday was bearish as well. So my overall sentiment for Web is still bearish. It's still more likely to continue to test the support at 3.2. So just put it in the parking lot for now. If you are really interested to trade Web, add it into your watch list. You know when to do a test buy, right? The two combinations, 10 MACD combo must be valid. The momentum power indicator should be bullish. And if you regard yourself as an experienced and disciplined trader, you can skip the 10 MACD combo for as long as the momentum power indicator is bullish. That's what you've learned. One of the things that you've learned during the Evergreen Strategy in Trading the Philippine Stock Market seminar. But for now, I am bearish on Web. So the next stock that we're going to talk about is Chelsea. So Chelsea closed on Tuesday at 6.93. It broke below the previous support at 7.18, which is now acting as its immediate resistance. Support is now at 6.2. The 10 MACD combo remains invalid. It has been that way since the first week of July. RSI is downward sloping, moving toward the classical oversold level. Risk level of Chelsea is still low. The downward momentum is already very strong. Okay, so the dominant range of Chelsea on Tuesday was between 6.8 to 6.9. The true market sentiment of Chelsea on Tuesday was bullish. So it seems that someone found the price near 6.9 attractive already to catch the dip, to buy the dips. But as far as we are concerned, we don't hurry. Most of us don't have billions in our pockets. So let's not catch this falling knife yet. We have to strategically know when to enter a new position by waiting for the 10 MACD combo to be revalidated and for the momentum power indicator to become bullish. So I'm still bearish on Chelsea. Don't enter a new position yet. Next, we got GSMI. It closed on Tuesday at 64.5. It's now at the brink of retesting the previous support or the current support at 63.7. Resistance. For the resistance, it's a psychological resistance at 85.8, which is in confluence with the 61.8% extension of the up Fibonacci. But if we are to get a historical resistance, I would say that's between 68.5, the most recent one. Okay, so once it breaks below 60, this support level at near 63.8, the next support will be 54.13 or 54.10 or 54.50. The 10 MACD combo is not yet invalid, but it will remain valid the 10 MACD combo will remain valid for as long as the price does not move below 62.8, and for as long as MACD does not register a death cross below the signal line, of course. Foreign investors registered a net foreign buying worth 2.8 million pesos on GSMI. RSI is already downward sloping. It seems that profit taking was the flavor of the day when the price hit 68.5. So risk level is already moderate. It's still moderate. While the upward momentum remains very strong, I am already seeing a bearish convergence between the positive DMI and the negative DMI. So be on top of your trailing stop loss, especially those of you who strictly followed our 10 MACD combo and momentum power indicator. Those who made some fortune when they entered a new position in the first week of May on GSMI. Congratulations to you. Please share your success story in our private clients forum. Share a success story so that others will be inspired in terms of sticking with the methods that we have been teaching you. I'm going to create a new section for that, success stories in implementing our methods. Yes. Okay. So let's take a look at GSMI's dominant range. So the dominant range on Tuesday was between 64 to 65 here. 64 to 65. The true market sentiment for GSMI is bearish. What do you expect? It's a tall red candlestick and a red volume bar. Okay, so it's bearish. So we don't have a confirmed buy signal yet. Take note that we can only preempt the 10 MACD combo, but we should not skip the bullishness of the momentum power indicator. So no buy signal yet in this case for GSMI. If you have GSMI and it's still trading above your trailing stop loss, just hold your position. Hold your position. Don't top up. Okay? Can you lock in some profits? Of course you can. You can preempt your trailing stop loss if you would like to. Although I'm not yet seeing an alarming reason for that, since this red volume bar on Tuesday did not engulf the height of the daily volume bars to its left. So it did not engulf the size of its previous daily volume. Okay, but don't enter a new position. Okay, don't top up too. Last in this video is NIKL. NIKL closed on Tuesday at 2.5, but it maintains its position above the support at 2.5. Not above, but it's exactly in confluence with that support level. Resistance is at 2.7, but if it breaks below 2.5, 2.35 is waiting as its next support level, followed by 2.16. Unfortunately, the 10 MACD combo is no longer valid. Foreign investors, no, it's not worthy to be mentioned. It's an insignificant amount of a net foreign selling on Tuesday. RSI is downward sloping, moving toward the neutral territory. The risk level of NIKL is low, although by classical interpretation the upward momentum is still very strong, but there's a caveat. There's already a bearish convergence, a formation of a bearish convergence between the positive and the negative DMI. Okay, so that's something that we need to consider, especially if you are just planning to enter a new position. The dominant range of NIKL on Tuesday was between 2.5 to 2.58. 2.5 to 2.58. That makes the momentum power indicator bearish, not just because of the concentration of the dominant range toward the intraday low, but simply because it's the red candlestick, it's a red volume bar, etc. Those four criteria, remember? So the true market sentiment of NIKL is bearish. So I'm still bearish on NIKL in the short term. If you have nickel and it's still trading above your trailing stop loss, I suggest that you stick with your trailing stop loss. You can also preempt it by locking in some profits by selling a few tranches. If your total holdings on nickel is more than 20,000 pesos. Anything lower than 20,000 pesos, for me, anything lower than 20,000 pesos, I don't divide it into several tranches anymore. Okay? Now, if you're planning to enter a new position, cancel that plan for now. Wait for the momentum power indicator to become bullish and ideally for the 10 MACD combo to be revalidated. Alright, so you've heard my technical analysis for these 10 stocks in preparation for the next trading day on Wednesday. I'd like to remind those 1-year subscribers and even the non-1-year subscribers that I'll be in Cavite, Dasmariñas, Cavite this coming Saturday to conduct another The Evergreen Strategy in Trading the Philippine Stock Market Seminar. It's mandatory. I'm already at the brink of making it a mandatory requirement for the new subscribers to attend the seminar so that you can appreciate all the more with clarity the methods that we have at Equilist Analytics. So 1-year subscribers, you can buy your ticket at a 50% discount. Okay, I hope to see you there. The feedback that I have been getting from the subscribers who attended the seminar is so far so good. They told me that they got a clearer, better understanding of what we've been talking about in the forum, in these daily videos after attending the seminar. Okay, for the 6-month subscribers, since you are not, you won't get a 50% discount, I still suggest that you attend the seminar. There's still an early bird promo on our website if you'll register here, seminars. Okay, so get your ticket if you would like to attend this in Cavite on August 10, this coming Saturday, from 10 a.m. to 5 p.m. I'd like to see you there. For Makati, that will be on August 17. Okay, and then I'm going to rest for a while in conducting this seminar before I'll go back into Davao on October 26. Okay, so I do really hope to see you there so that you will have a crystal clear, a better, clearer understanding of our methodologies here, from stock selection all the way to the execution of the selling plan. Okay, so again, my name is JC De Guzman. Have a profitable trading week. Thank you. Bye for now.